One of the biggest problems as to why so many of us are struggling with credit and debt is because we don't understand the fundamental premise of either one and that there's a significant distinction between the two. This video is going to be given a focus on the difference between credit and debt so you can have a better understanding, and that understanding can lead to better actions and behaviors that get you to the results, like getting you quality credit cards, getting you better access to financial resources, qualifying for mortgages to build your financial wealth and develop home ownership, to invest in real estate, to grow, to fund and grow a business. These key fundamental elements that lead to financial success, that lead to better quality of life through access to financial resources, has to be coupled and built on top of a good understanding of the foundational principles of these terms in the first place. So it's very important for us to have an understanding, and the point of this video is to give you that context. So when it comes down to credit and debt, there's a big distinction between the two, and it's important to understand what that distinction is. I'm going to give you the dictionary version or breakdown between the two of them, but then we're going to get beyond that and break it down in real terms. What's the real difference between credit and debt? Why is it important to understand it? And how can you utilize this information to better elevate yourself on a financial scale? So credit is the ability to borrow money with the promise to repay it, while debt is the money you actually owe and must pay back to a lender. Understanding the difference is crucial because responsible use of credit builds a positive financial reputation, enabling access to essential loans and mortgages, whereas misuse of credit leads to overwhelming debt and damaging your ability to get future credit and potentially leading to financial hardship. So that's the textbook definition of the discernment between the two. What we need to get into the weeds on is, what does this look like in real life? Like, what does this look like actionably speaking? Because a lot of us know that have been in the real world and the adult world long enough. We know credit goes beyond just borrowing money. Credit shows up on employment applications and background checks. Credit shows up when I apply for various forms of insurance, on and on. There's things that you would never attach credit to in your mind because you don't discern credit and debt, that people are judging us, entities and institutions are judging us by. So it's important to understand that credibility is really your financial reputation. It's also a documenting of a transaction between two entities or two or more parties. It's really just kind of more of, you being understood to be somebody trustworthy enough to give access to something of value in advance of you exchanging back value, if that makes sense, right? So in today's world, that has been brought down into and surmised into a credit score, basically a mathematical algorithm that we're scored by to give a simple analysis of our financial behavior and our credibility. But when it comes to essentially interacting with each other, basically what that means is, if my credibility, and some of us may better understand if I say my face card is good enough to have you front something to me that I have not exchanged back that value or paid you back for yet, or will be intending to pay you back in the future. And so an example of this in the business world might be trade credit. Okay, for those of you who are in business or planning to get into business, an example of this could be trade credit. Net 30, net 60, net 90. I may work with a merchant that's providing cleaning equipment that I need for my cleaning company. They may, if I have my situation in order as far as my, financial report card that they may pull from, that could be done in Bradstreet, it could be whatever. If I have that in proper order, they may front me $500 in supplies that I need to operate my business. And within 30 days, I'm promising to pay them back. There's no debt attached to that per se. Yes, technically the debt is what you owe and the value you owe back for the $500 in supplies. But for those of us in today's world that think about it, we think about, debt in the sense of the cost of money. That's where we get it entangled. When credibility is just like, listen, I have this project. I finally got this project, signed off on and agreed this particular apartment complex or office building is going to allow me to do cleaning for them. I get paid on the back end on the invoice, but I need the supplies now to get the job done. You've gotten your business entity put together. You've developed a little bit of trade credit, and Uline says, you know what, that's fine. You know what, take here, we'll front you the $500 in cleaning supplies. And then within 30 days, we're expecting that $500 paid off. Simple. Now you have the opportunity to go out and function economically now and exchange value to the office that you're cleaning or the apartment complex or whoever gave you that contract opportunity. Uline is waiting on getting that money back from you, right? But at the end of the day, that was your credibility that allowed that to get done. And it allowed for economic activity without necessarily having a cost of money attached to it. That's very important. Honestly, credit cards are the same thing. Credit cards only become debt when you don't pay back as agreed. You don't pay back the full amount as agreed. They're going to front you the money for whatever it is that you're going to use. Your basic everyday living and cost of goods and services you're using on a regular basis if it's a personal credit card, or your business transactions, activities, and expenses if it's a business credit card. They can lend you hundreds, thousands, tens of thousands of dollars at a time. You can use all of it. If you pay it back within the statement date, the billing, the statement cycle, then you don't owe a dime extra. That's credit. That's credit. Somebody's allowing to front you the money or the goods in advance that they're expecting you to pay back in full within an agreed upon window of time, but there's no debt attached to it as far as the cost of money. And this is why it's important to understand the distinction. Debt, as we see it in today's world, is the cost of money. It's the interest. It may be the fees. It may be the other costs associated with borrowing money. That's where the fear portion comes in. A lot of us understand credit in our day-to-day lives. We get things from each other and borrow things from each other all the time that the only thing that's expected back is the item itself or the exchange evenly for the item itself. The actual debt part is the banking system, the financial system, the lending system that attaches the cost of those funds. It attaches it because there's risk involved. They attach it because I could have deployed it somewhere else that could have made me money. That's not credit in itself. Yes, it's become interchangeable, but it's important to understand these fundamental principles because you'll have a better relationship with credit and debt if you understand it. I've also taught on this channel many times over that you can build credit without necessarily going into debt, using basically collateralizing cash, secure credit cards and secure loans, the Navy Federal Pledge hack that got so popular. Like, this is really something that's semi-age old, but it got popularized again as Navy Federal and the content around that got hot. At the end of the day, I've been teaching that on this channel for quite some time, that you can just take cash, do secure loans and secure credit cards strategically, and build a phenomenal credit score that can get you access to all kinds of things, business funding, mortgages. The name of the game is to build your credibility, your financial reputation, to be able to interact economically and financially on a good name. It's on you when you decide to actually take on debt in the process. That's why I encourage on this channel, yes, you take on debt strategically for production, for growth, to build or create something, to attain an asset that's productive. But other than that, you really should be focused on your credit and credibility. You don't have to take on debt if you know the difference. I hope that makes sense. I want you to comment down below and let me know if that makes sense. Again, the pursuit of high credit limits on credit cards. Many of us have learned that is a great segue to other forms of debt that can be more productive, that can lead us to business funding or capitalizing and funding a business, that can lead us to acquiring real estate or land or equipment that can be used for productive means that brings us revenue and brings us back value that exceeds the cost of the money. It exceeds the cost of the debt. That's why we're willing to take on debt. It's even encouraged for us to take on debt, at least fundamentally speaking. So it's important to distinguish credit from debt. It's so essential. For those of you who are new to the channel, I'm JP, the founder and architect of the channel. I'm a career banker by trade, consumer and business banking in the retail sector. 10 plus years in banking, 12 plus years in financial services. The lending space, the banking space has been my bread and butter since I've been in the workplace for the most part, give or take a few years here and there. I am providing these concepts to help you maximize your relationships with banks and to maximize your borrowing capacity, not for you to drown in debt, because you're going to build your credibility and your financial reputation, and you can interact in the economic system strategically to create value and build up your financial positioning in the process. I call it customizing your blueprint for prosperity. That's why the name of this channel is Blueprint for Prosperity. At the end of the day, the goal is for you to be able to use the financial resources and strategic systems that you put in place and the systems that are already there or have been proven to work to get you a piece of the pie. And in many cases, credit and debt will be necessary to accomplish these things. But you have to understand these types of fundamentals in order to be able to do so effectively. If you keep commingling the concepts of credit and debt and you do so poorly, then you're going to continue to fall victim to debt and ruin your credibility. They're not the exact same thing. And I want to give a quick shout out to the YouTube channel, Financial Historian. I watched the video recently. It's a really, really impressive channel for those of you who are into history and into finance at the same time. But he took a particular video, the narrator did, and he just had a quick segment that he highlighted this whole video topic. So I want to give a little shout out because I've been covering videos for the entire length of this channel about credit and debt being separate. But he surmised it very well in the video. I might even link it in the description down below. And the point of me giving this is to get you to understand he's breaking it down in that video from an entire economic level for entire nations. I'm breaking it down for you as everyday consumers, as everyday business owners, as everyday investors. There's a distinction between credit and debt. It's very important that you understand that if you want to be successful with both of them. Comment down below and let me know your thoughts on the topic. Let me know your understanding, or if you have a better understanding now on credit and debt, let me know your relationship with both. I also want you to comment down below and maybe let me know where you're at on your financial journey and how credit and debt is playing a role on your customization of your blueprint for prosperity. If you want to tie in with me on Instagram, you can do so in the links down below. If you also want to work with me one-on-one, you can comment down below, or you can also go in the link in the description to find out areas that I specialize in that I may be able to assist you. I want you to like, comment, share, subscribe. There's a new feature that allows you to boost the video out, to encourage this to get out, to hit the algorithm and get out to more people who need quality financial content from real financial professionals and not just random YouTubers who are trying to sell you something. So support the channel so the channel can continue to support you. Other than that, to all my pioneers, welcome back. My new viewers, welcome in. I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.